Hi everyone, today let's talk about the JOLTS job openings. Do me a quick favor and like and subscribe and watch the video till the end to help out the channel, and let's get started. So the labor market continues to weaken here. Job openings fell here again in April, hitting the lowest level since February of 2021, continuing to signal a slowing in the jobs market, down nearly 300,000. Still sitting pretty high at 8 million jobs, so not crazy low, but we are seeing a pretty substantial decline finally. It's been high for a very long time. The jobs market continues to be very hot, and sure enough, we are now finally starting to see that decline. 300,000, which accounts for 19% lower from a year ago, and openings were down from 1.2 to 1 after being at 2 to 1. So we are now at 1 to 1 for job openings, which finally is showing what the Fed wanted to see, which could potentially start to bring relief to the inflationary effect of wages. Moving over to fear and greed, you can see we're down to a 42. This is after being at a 51 yesterday, so pretty substantial decline, nearly 10 points lower. And you can see the fear and greed index continuing to trend lower. This is a new relative low. Last time we were lower is all the way on May 7th, so I guess that's not that long ago. But still hovering here in greed on momentum, fear on breadth as well as strength. Really, these have not changed very much at all. But we did see a slight step higher again on volatility, and then safe haven demand stepping all the way into extreme fear. Pretty interesting to see that. And then junk bond demand back into regular fear. So we're seeing bonds start to agree in a fearful market, but equities are still not really agreeing with that greedy momentum. Moving over to seasonality, you can see it's supposed to be a sideways choppy market pretty much all month, and that does seem to be what we're getting. Right now, markets have been choppy, a little bit up, a little bit down here and there. Looking at the specific day for the 4th, was supposed to be a slightly bullish day, and then tomorrow is supposed to be a slightly bearish day, and then basically flat up until the 11th or so. So see how it plays out. That's what the seasonality says for the next week or so. Moving over to the economic calendar, you can see JOLTS report was pretty much the only thing important here for today, and you can see over 300,000 lower than expectation, and actually the previous read was revised down by over 100,000 as well. So jobs market continuing to show a little bit of weakness, and then looking at Wednesday, we got some more economic data, global services PMI, non-manufacturing employment, non-manufacturing PMI, non-manufacturing prices here at 10 o'clock. So 9:45 and 10 o'clock could be a little bit volatile for markets tomorrow. And then if you hold anything overnight for Thursday, we have the ECB interest rate decision. They are expected to cut. You can see 4.5 down to 4.25. We'll see how that plays out. And then initial jobless claims as well as Fed balance sheet. And then you have the ECB conference a little bit later here at 8:45 with the decision there at 8:15. So we'll see how that affects markets. Could be interesting on Thursday. Moving over to SPY Max Pain, it did step up $1 here to 526, put wall at 525, call wall at 530. And you can see that call wall is pretty high there at 530 at 19,000, nothing crazy. But I also want to highlight just how much there is underneath the curve. So all of these together do make a pretty decent amount of calls up at these levels. Basically from 531 and above, I wouldn't expect to finish higher than that. Not a ton of options, only 558,000. So 520 is your low side and 530 is the upside. Moving over to the charts, you can see again we dipped low, hit the 55 EMA, held that level, and then pushed up into the close. Got back above the trend, back above the 200, so that looks a little bit more bullish here today. You can also see momentum rolling to the bull side. It's up a little bit after hours. Resistance for me, 531.47. And like I said, a little bit of bullishness coming off that 21 EMA VWAP. Continues to hold slightly higher lows and probably pushing up to that 531.47 area tomorrow. And moving over to the Tasty charts here on the 4-hour, you can see that upper ATR band. That's the price target on this chart, which is in line with the highs that we saw back here on May 23rd. So could be a zone of resistance up there, but probably the price target 533.35 is that upper band. Momentum not really supporting it, not a ton of volume on today's up move, but we're still coming off of the volume that we saw back here on this really strong candle, and I do think we're probably going to swing higher in my opinion. Moving over to the NASDAQ, similar thesis, dipped low in the early session, consolidated for a while, and then eventually pushed all the way up to the 454 area. And actually looking at this hourly chart, you can see on that 14 candle, pushed all the way back down to VWAP and then bounced again into this zone. So aggressive rally, slight pullback, ended up finishing flat on that 14 candle, finished at 454.56. Again, similar thesis to the SPY, closed right at that level. Right here, 454.40. If it breaks there, we're probably pushing back up to these previous consolidation, up around 458, 459. In terms of momentum, we didn't see that roll up the same way that we did on the SPY, so that's a little bit concerning, a little bit less bullish. But the close right at the high of the candle like that does look good in my opinion. Moving over to the Tasty charts, you can see we did finally finish in bullish conditions on that candle, not by much. You can see it was trading here at 454.76, then we closed at 454.99 there on that last 4 o'clock candle, on that last 4-hour candle, so just barely bullish conditions. ATR stops are now down at 445.97, so technically bullish going into tomorrow's session. A little bit more bullish here tomorrow than it was today. Moving over to the Russell did not participate in the rally, so it was down 1.29. It's at a critical support 201.88. That zone needs to hold, otherwise we're pushing down to 200, potentially down to 198.75. Momentum bearish, RSI bearish, does not look good. Definitely not as good as the S&Ps or the NASDAQ. And then the Dow finished a little bit positive, 0.33. Momentum still stepping towards bullish, but not super convincing. Right at the level it was at yesterday. 387.77 is the level. After hours, it's technically a little bit above that. But you also have the 8 EMA sitting there, 388.21 as a potential resistance. So Russell looking a little bit bearish. Dow a little bit more bullish, but still does not look great in my opinion. Moving over to stocks that moved here, we have Spotify and Carnival. Continue to talk about these. Spotify up 4.16% after being up 5.67. Big move here. All-time highs for Spotify, continues to break higher. And then looking at Carnival, a continuation day here as well, 5.81 off of the day yesterday, which was 6.17. So massive breaks higher, and they continue to look more bullish today than they even were yesterday. Carnival probably headed to that 17.5, 18 area like we talked about last time. And then Spotify, this is price discovery, so who knows where it's going. Moving over to Apple and Tesla, Apple up 0.16, continues to look okay. It's above that 193.96 level, just like it was in the previous close. It's up a little bit more after hours, so continues to look good. Momentum slightly heading towards bullish. Tesla, on the other hand, gapped lower, 0.86, and then dojied. Really, it's in the same consolidation it's been in for months at this point, but momentum rolling to bearish a little bit. RSI breaking down a little bit. If that 55 breaks, then you got the trend line. And then if those break, 167.34 is potentially in there. But this looks a little bit more bearish than it did yesterday, but it's hard to say with this consolidation continuing. Moving over to Microsoft and NVIDIA, Microsoft caught a bounce and ended up holding that 413.36 level. Tested it again, rallied up again. Momentum still bearish, RSI still bearish, so it doesn't look super great. I still think this is probably going to head a little bit lower, but it did hang in there today, 0.67. 0.62 to the upside, and then you have NVIDIA 1.25%, still heading towards that trend line up around 1200 in my opinion. Moving over to Meta and Amazon, Meta dojied flat at minus 0.1, still at the trend line. Still think this is probably going to break higher, but it needs to get above that 55 EMA at 482.92. And then looking at Amazon, looking at that 9 EMA sitting there at 180.28. Did catch 2 bullish days in a row, momentum swinging to bullish a little bit. This is still a downtrend. Still looks like a double top overall, but it did catch a little bit of a bounce at that neckline at that 174.23 area. Probably just a short-term rally and then looking for that bigger breakdown, but in the short term, like I said, could be a little bit bullish. I think we talked about this yesterday as well, headed towards that 9 EMA and the trend line there, right in that 180.50 area. Moving over to staples and discretionary, staples catching a bid, breaking higher. 177.50 broke. If you bought the breakout, you'd be up at around 178, 50 cents little move there. Momentum swinging to bullish, RSI breaking higher. Looks like we're headed to the trend line up around 78.92 and then potentially the level 79.90. Everything looks good on that breakout, so that's a good move. Might catch a little bit of resistance at the previous high, but I would expect it to go higher. And then discretionary is very slightly bullish, 0.1. Almost touching the trend, holding that 9 EMA right at the 144. Still just a very slow grind higher. Mixed conditions, below the 21, below VWAP, below the 55, but technically above the 9 and the 144. So you could argue short-term bullish, momentum's showing a little bit of bullishness. RSI technically bullish, it's above the SMA there, but the SMA is also trending down. So mixed signals, but slightly bullish. Overall, staples looks better. Moving over to transports and oil and gas, you can see transports broke lower here today off of the big bearish candle yesterday and the huge volume. You would expect that to continue lower, and it did. 63.22 is the level. If it breaks that, we're probably headed down to the next one at 61.48. And then oil and gas gapping lower 1.54%. You should have expected that off of the massive bearish candle yesterday. Sure enough, we hit that 200 SMA after breaking through my level. Caught a little bit of a bounce there, but this still looks quite bearish. And the trend continues to be bearish, so see how that plays. Next level for me, 140.88. Moving over to oil and copper, these continue to fall off a cliff here. Oil hitting my level at 73.07, we expected that. Now we're at the level Now we're below it. We gapped through it after hours. Next level for me, 66.50. Potentially these previous lows here around 68.50. See how this plays. Oil does not look good at all. And then copper down again here today, 2.8%. It's below my level at 4.54. Got the 55 EMA sitting there at 4.479. Momentum bearish, RSI bearish. So commodities depicting a little bit of a slowdown in the economy, which makes sense based on what we saw on the jobs data today as well. Moving over to ROIT and Mara. So I got asked to do a little bit more with crypto here. Not a huge fan of these stocks. They're quite volatile. And I'm not really sure how sold I am on the space, but let's go ahead and take a look at it. I've looked at these before. You can see I do have some levels on the chart. So ROIT, this looks a little bit bearish to me. We're below all the MAs and SMAs on the daily chart. Next level for me would be 878. That's the low back here from October of 23. You could also add a level at this previous low. That would be a little bit tight. 790 is that level. So this doesn't look super great. ROIT probably breaking down a little bit further tomorrow if I had to guess. It's up a little bit after hours, but probably doesn't mean much. If I had to pick between these two, I would definitely go with Mara. This looks like more of a bullish structure. It's testing that 55, testing the 144 in that same zone, but bullish on the day, 4.8%, which is a nice little move. It's up after hours. If it can get above this trend line here, which it does seem like it's going to do, this would probably push up to that next trend here around $26, which would be an absolutely colossal move for such a little stock. That would be about a 27% move on Mara. It's done things like that before. You can see it here. Hit the trend line, big candle here, 6%, another candle, 2.6, and another candle, 17, almost 18% on that candle, another 10% on this candle. So it's done moves like that before. I would definitely be cautious in here. Like I said, it is volatile, but if you want to get into the digital holdings, crypto space, Mara looks like a decent setup. Moving over to the 20 and the 50-day breadth, continuing to go lower here today off of yesterday's candle. We expected the down move. It wasn't really that aggressive though. 36.6, continuing to hold on the 20-day. I still expect it to break lower. Similarly here on the 50-day, bearish candle. Would expect it to push that 40 zone, but they're hanging in there a little better than I would have guessed. Moving over to the dollar here on the hourly and the daily, you can see we got a big push down yesterday. Slight retrace here today. Higher low setup potentially there. At the 12 o'clock candle, caught a little bit of a bounce, finding some rejection at the 21 EMA there, which is sitting at 104.16. We'll see if that zone rejects. Daily chart, obviously bearish. We're below almost all of the EMAs and SMAs. 144 hanging in there at 103.96, but we're below the 9, the 21, and the 55, as well as that 200 SMA. So just the 144 hanging in there. Level of support for me, 103.64. And then if that zone breaks, 102.98 would be the next low. Moving over to the 2-year and the 10-year, these have been on a straight line to the downside, 4 days in a row of consistent bearishness, 5 days here on the 2-year. Pretty interesting to see that on the jobs data. Soft jobs market leads to lower yields. We've been talking about that for a while. Both of these broke a level, so 4.8 did break, 4.35 also breaking. 200 sitting there on the 2-year at 4.75. We'll see if that breaks. What's interesting is that we didn't really see markets rally on yields continuing to go straight down for 4 days. Markets have been sideways choppy at best. And if yields were not going lower, I would hate to see what markets would be doing. Maybe they'd be more in line with my medium-term thesis, which is technically bearish for now. But we got yields going lower, propping up markets, which probably should be in bearish conditions, but have hung in there quite well, like I said. Moving over to bonds, we got J&K doing nothing, still in that same zone. TLT, on the other hand, gapped higher and rallied, hit that 92.82 level, almost to the penny. High of day was 92.80, so just short, 2 pennies short. I would call that a touch. Pulled back just a little bit. Momentum is bullish, so this looks good here. Go ahead and go full screen on that one, see what this looks like. We really have not been above that trend line. You can see we threw a quick wick here on 1 February, but we're above it now. That's a breakout. We also had a low, higher low setup. Now we have a high, higher high. This looks good. Probably going to break higher. Needs to get above 92.82. If it does, we're probably headed towards 96.50. Got the highly traded zone there at 93.94. So see how that plays out. Everything on TLT does look a little bit bullish going into tomorrow's session. And with TLT rallying, we should see equities going with it a little bit more, in my opinion. Moving over to volatility, move index rallying. Interesting, especially with bonds going higher. You can see it here on the daily chart, similar thesis. Closed right on the high, momentum bullish, RSI bullish, move index saying we're going higher. Move index showing volatility in bonds. And then you got the VIX also going higher today, just barely, 0.23. Through another wick to the upside, momentum's fading a little bit, but it's holding that 9 EMA. Interesting to see markets going higher, the VIX going higher, move index going higher, bonds are going higher, while the dollar and yield start to pull back. So a little bit weird, but right now it looks like the VIX is going to go higher, which is typically bearish for markets. Moving over to my accounts, I did okay on the day, about $400. IWM was down $296, so that wasn't great, but managed to hedge almost all of those losses. I think I've kind of figured out how I'm going to do this here. I just really have to do the call spreads to help mitigate a little bit. Down to 202 on the puts, need to roll these calls out to get a little bit more credit there. This is bouncing a little bit after hours up to 202.40, so that looks good. Like to see that. Like to see this rally a little bit more tomorrow would be good. And then looking at the Qs, still have my shares, still have my covered call at 449 for $5 credit, so max profit there, 454.20, so we're basically there already. And then I have a call here at 457. That's in a losing position. That's for 6 days from now. Not sure what I'm going to do with that quite yet, but I did roll my puts up and out here for 55 cents and 79 cents. That's going to be in good shape. This is up a little bit after hours as well, up to 455. We'll see how that plays. I might take off this 449 call tomorrow. We'll see if markets continue to rally and just leave this 457 on for 6 days as my covered position, depending on how bullish the NASDAQ looks. But right now in a bullish position, you can see my deltas on both of these are bullish, just not super bullish. Still being a little bit patient with the sideways choppy market that we've seen over the past couple days. Let me know down in the comment section what you think of the jobs report and the slowing economy. Will we see a rate cut? Will it be enough to save the markets? Or are we in for a rough time? Definitely like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.